What's up, guys? It's Morgan from Lynchman. I wanted to start today's video off with a short clip of the previous version. I recorded the entire video without realizing I had been messing with voice effects on my Blue Yeti. So check this out.
Heikin Ashi, or average bar in Japanese. I'm going to break down whether or not I actually use this in trading, what I think about it, and a few things related to that. So, ikimashou.
Full version that you can't even understand, feel free to let me know and maybe I'll look at posting that at some point. But I want to talk about Heikin Ashi in a normal voice today, which basically means average bar in Japanese. Now, this candlestick variation is said to be more reliable. Now, I want a disclaimer ahead of time that I'm not a super fan in every situation. I do see its utility in certain situations. So let's take a look at it, at an example of it, and I'll kind of break down what my experience has been. Ja, ikimashou. All right, so what are key takeaways that Heikin Ashi gives us? Well, it's denoising is what it's referenced as. Essentially denoising charts so that you can more clearly recognize trends. This is the key point that makes me not really like it, especially for day trading. The downside is that some price data is lost with averaging, which could affect risk. It's weird to see candles that aren't moving properly based on the price itself. So if you watch volume and price action like I do, it gets rather confusing. It's not really a clarifying thing. And it's a little backwards to look at. So let's look at the candles themselves. Surprise, surprise, we're going to look at Snap's chart because I trade this every single day. Now, on top, we have standard candles. On bottom, we have Heikin Ashi. You'll notice that the trends tend to stay a lot more green and a lot more red on a Heikin Ashi chart than they do on a real chart. Well, a real chart, both of them are real charts, but with the standard candles. The reason that this isn't helpful to me is these moves can be just as quick and just what I need to scalp in and out of something in 5, 10, 15 minutes. Usually my trades do not take a long time to develop. That's why I think the utility for Heikin Ashi could be in that it helps you determine long-term trends more on a daily or a weekly chart if you're swing trading or investing long-term. For day trading and scalp trading, I don't think it indicates correctly, and it made me confused a little bit and really off. One of the trades that I attempted with it was successful, but I think it had a lot less to do with Heikin Ashi and more with me watching level 2 data. Now, the other one failed miserably. It was rather confusing. That was the first one I attempted. Eventually, I may do a video doing a live trade, but I just want you to look at the charts and see how different it is, because reading the charts is a whole new way. Basically, every new candle starts halfway through the other. And so in the case of green, you want a solid green and a very little tail at the top. And then for red, you want the reverse. So you want that top red tail and you want it thickened down. And then any uncertainty does do some of the hammering or some of that type of stuff. But I feel like traditional candles, if you read them anyhow, are a lot more clear in what's going on versus this. This just helps you recognize whether or not the trend is there. And again, I don't use any individual indicator, so I have some reversal indicators, the TTM scalper alert, which is these arrows, and then the 9 and the 14 exponential moving averages. All right, so ultimately, what is the point? Why would I use this at all? Again, I think over a longer term, it does help you recognize the trend, but it's still like any other indicator, it needs to be combined with something else. So I thought I'd get in on the meme game and share a few thoughts that I had through memes. Look, I just know that there's going to be somebody at some point who's like, Heikin Ashi is the way. It is literally way better. Listen, it depends on what you're doing. And here's where I enjoy doing these videos is my confidence comes from the fact that I test these things out, that I think about these things in depth and how I trade and I apply that. So, yes, this could help you. It may not. That's kind of the secret sauce there, people, is everybody approaches trading and investing differently, and that's good. Adapt it to yours if it makes sense. Otherwise, stay away from it. And that's really what I kind of found is, I might flip the chart this way when I'm looking at swing trades or something like that. But in general, I still think that me personally, I'm going to stick with the standard candlesticks. That's what I'm familiar with. It seems to work relatively well. It's ironic that I say that because the last video I posted was based on a loss, but I just kind of want to like point out like there is no perfect indicator. I don't care what anybody tries to sell you. I don't care what anybody's trying to say. There isn't one. Okay, it's you've got to figure out what's going to give you the best chance and go based on that. So anyways, that's my thoughts. Do you use Heikin Ashi or do you use the standard candlesticks? Either way, I'm not judging you. I'd be curious what everyone's trading strategy is. Hope that was helpful. Thanks for stopping by. Hope to see you again real soon. Ja, mata ne.